Yes, the housing market is slowing down. But the question is, are we coming into a nosedive? Are we gonna see the housing market crash like we saw in 2008?
Altitude 8,000, 7,000!
Now, I don't think so, but let me give you some of the most recent stats of what's happened here in Ada County, and then I'll flesh that out a little bit more. The median sales price in Ada County last month, in May of 2020, was $602,250. And that's a 16.1% increase year over year. Now, new home sales make up about 28% of our market share. And because new homes are more expensive than existing homes, the median for new homes was $639,105. And that's what's driving up that median just a bit. The median for existing homes was under $600,000. It's $586,750, which is a 16% increase over last year. Mortgage rates are up, you know that, and this has led to a slowdown overall in sales. Last month, there were 1,446 pending sales, which is a drop of about 12.7% compared to the same month last year. Now, interestingly though, pending sales have been on the decline over the past year. We've seen a continuous decline in pending sales month over month since May of 2021. Now, the Boise housing market is a reflection of what we're seeing nationally across the United States. Over the past 6 months, we've seen a decline month over month in sales nationally, and that puts us at the slowest pace that we've seen in house sales over the past 10 years. And in Ada County, so far we've sold about 5% less homes than we sold at this point last year. Inventory is up as well here. We're at about 166.7% compared to last year, which sounds shocking, but let me put that into perspective. Last month, there were 1,520 homes for sale here in Ada County, but in May of 2021, there were only 570. In May of 2020, though, there were 1,239. May of 2019, there were 1,533 homes for sale, and in May of 2018, there were 1,320 homes on the market. Now, 1,520 available homes is still pretty low when you think about that number in terms of the wider picture. That number puts us at about 1.7 months supply of inventory. Now, anything under 3 months is considered to be a hot seller's market. So at 1.7 months of supply, we're still in a pretty hot seller's market right now. The average day on market last month went up slightly. We're right now at about 11 days here in Ada County, which is up from 8 days in May of 2021. But just think about that number for a second. We're saying that 11 days is a long time for your house to sit on the market before it's sold. That's an incredibly low number. And I think it just shows us how crazy this market has been over the past several years. 30 or 60 days should be closer to normal. Now that number is going to go up in the next several weeks and months. And that's because people usually are in contract on their home for 30 or 60 days. And so what happens in the economy usually takes some time for it to catch up to the housing market. And then the final statistic that I have for you is 50% of buyers paid over list price last month, which means that on average, houses sold for about 100.9% of the list price here in Ada County, and that's compared to 105% back in May of 2021. Now, as you probably know, the Fed raised the interest rate several days ago. Mortgage rates are going to be affected by that. We're currently at about 6%. So the stats that we read from last month, from May of 2022, are not really reflective of what we're going to see in the economy moving forward. Having said that, I don't think that we are moving into a nosedive, the likes of which we saw in 2008. All the economists that I'm reading are saying that we're going to see a deceleration of house price increases, but not a depreciation. And that's an important distinction to make. House prices across the United States have actually had a consecutive gain for the past 122 months. Now, sometimes the gains were as low as 2%. Other times they were as high as 15%, like what we've seen over the past several years. But overall, for the past 10 years, house prices have continued to appreciate month over month. And so what economists are saying is in the next coming years, we're probably going to see a slower appreciation of house prices. Now, interestingly, the housing metrics across the United States are still better this year than they were before the pandemic in 2019. For example, we're seeing less showings in our listings, but we're still seeing more showings this year than we did in 2019. So overall, 2022 is still beating the pre-pandemic years leading up to 2020. But here's what everybody wants to know. Should I buy a house now, or should I hold off and wait for the interest rates to drop, possibly the prices, and then buy a house? Now, ultimately, only you can answer that question. But here's what I like to tell people. What's your need? Do you need to buy a house right now? And can you afford to buy a house right now? And I think if the answer to both of those questions is yes, I still think it is in your best interest to buy a house right now. And let's do a little experiment now and try and put some flesh on that to try and illustrate the point. Let's say you took out a mortgage of $300,000 at 6%, which is the current rate right now. Your monthly payment on that would be $1,798. That's mortgage only, not including taxes and all that, for a total of $21,576 for the year. Now let's also say, for the sake of this discussion, that the economists are correct and house prices will continue to increase at about 3% for the next several years. So a 3% year-over-year increase on $300,000 for the next 2 years means that you now need to take a mortgage of $318,000 and $270 in order for you to buy that same house 2 years from now. So for simplicity, let's just call that $320,000. So a $320,000 mortgage at 5% puts your monthly payment at $1,717 for a total of $20,604 for the entire year. Now that's only about a $972 savings for an entire year. So you sitting on the sidelines waiting for the interest rate to go down by a percentage point for 2 years saves you about $81 per month, which, okay, so you've saved $972 over the past several years. But what that doesn't factor in is raising rents between now and when you purchase your home, nor does it factor in you paying down your mortgage in making your monthly payment at that 6% interest. Now, I don't know if those are actually the numbers. None of us know. But what I do know is if you can afford to buy a home and you need to buy a home, now is the time to buy, because time in the market always beats timing the market. I remember talking to somebody several years ago who said that they were going to wait several years for house prices to go down before they bought. And since then, house prices here in Ada County have nearly doubled. Again, nobody but God knows the future, so I can't say what's going to happen, but I can say that all of the economists that I'm reading say that the market is going to slow, but they don't think the market is going to crash. And I was just listening to Dave Ramsey a few days ago, and he said this on the radio. He said, "I am 99% sure that house prices will not go down anytime soon." He said house prices have gone down 2 times over the past 100 years. One was way back in 1930, and the other one was in 2008. And the reason he says that is because house prices are 100% dependent on supply and demand. When there are more buyers than sellers, house prices always go up. Now, of course, there's other factors that affect how many buyers are in the marketplace. That's inflation, stagflation, and other market pressures. But unless the number of buyers goes substantially lower than the number of sellers, house prices will continue to increase in the coming months and years. And he gave this statistic, which I thought was interesting. He said in 2007, there were 116 million households across the United States. This year, there are 128 million, which is 12 million more than there were in 2007. And in 2007, there were 2.1 million housing starts. They started to build 2.1 million houses. This year, they started to build 1.4 million so far. So the inventory of homes across the United States is about 50% of what it was in 2007. Now, Dave Ramsey doesn't know the future either, but when he talks, I usually listen because he has a lot more experience and a lot more wealth than I do. But he made the same point that I've been making over the past several years. We have high demand and low supply, and those are the two contributing factors to house prices. So those are the latest numbers. Do with them as you please. To summarize, I think we are going to see a slower period of growth in the coming months and years, but I don't think that we're going to see a nosedive like we saw back in 2008. Thank you so much for watching. If you have any questions whatsoever, please don't hesitate to reach out to me. My info is in the description box below. And before you sign off, hit the subscribe button so you don't miss out on future videos.